Ladies and gentlemen, good day and welcome to the Q2 FY22 earnings conference call of Morepen Laboratories Limited. Joining us on this call today are Mr. Sushil Suri, Chairman and Managing Director, Mr. Ajay Sharma, Chief Financial Officer, Mr. Vipul Kumar Srivastava, Company Secretary. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sushil Suri, Chairman and Managing Director of the company. Thank you, and over to you, sir.
Good afternoon, everybody. I hope everybody is comfortable, safe, and little good news all around is that perhaps COVID is little generous. Hope everybody is still working from home or working in a safe zone using mask and social distancing. From a business perspective also, as I think all of you know that the second quarter, practically from July to September, was almost a regular quarter. It was only the post-impact of COVID which was affecting the various businesses. Thankfully, in our business, there was not much impact of COVID except for a few states in the country. There are few flight restrictions and cargo restrictions still there, and not necessarily because of COVID. China has another set of problems, but global cargoes and shipments have started. But it was business as usual to begin with. So I'm happy to share that in the current quarter, we had grown by 17%. The revenue has grown 17%. So it is a regular, genuine increase of business. There is no COVID, no extras. And we have clocked almost 400 crores, 398 crores. So last year, the company's total sale was 1,200 crores. So now we are inching almost toward 15 to 1,600 crores. For the half year, for the first 6 months, last year, for the first 6 months, we had 599 crores. Now, for the first half of H1 is 386 crores. So if you just double it up simply, so we'll be above 1,500 crores, looks like. So with the regular growth of revenue, and certainly the expenses have to be much nice. So EBITDA is also growing substantially. So there is a 26% increase in the absolute number of EBITDA. Of course, EBITDA margins have also gone up, which we will take up later. So 17% increase in our top line, 26% increase in EBITDA. And of course, it is resulting in a bumper crop in the profits because there is not much interest. And profit before tax is 70% up from our 27 crores in the corresponding quarter in the last year. It is 46.86 crores now in the current quarter. This is the highest ever we have grown. 70% increase in the profit. Of course, we are responsible citizens of the country. We have to keep provision for the tax. So after taxes, the profits have gone up by 38%. And similarly, the EPS also grew by 30%. The quarterly EPS comes to around 83 rupees. And if we extrapolate to it annual, it will be something like 3 rupees 30 paisa, 3 rupees 20 paisa kind of thing. So which is a very healthy sign. And you would notice that within the last 2 years, or rather I would say 5 to 6 quarters, so all the numbers have quadrupled or tripled, or maybe at least many times the profit is almost 5-fold. So there's a consistency in the results. There's a consistency in the demand. There's a consistency in the team spirit and work. Of course, we are all affected and hurt by the COVID, and some of us have lost close friends, close family members. So we stand with them. The company still keeps on making efforts to follow all the protocols of the COVID. Now, getting into a little more details. So on the revenue side, we have grown from 340 crores to 398 crores. And that's 17% growth. And I would like to share that till last year, we have been growing at CAGR of 25%, compounded annual growth rate of 25% year after year, and it includes the COVID year also, almost 5 quarters of COVID. And current year also, we have grown at 31%. For the first half, 31% we have grown. So we are maintaining the growth, and you would recollect the last few calls, earning calls, there was a question, and we ourselves were worried whether this growth would be sustainable. I'm happy to share that the growth level which we had achieved earlier, it is being sustained. Even in the first half, we have grown at 31%, while our CAGR is 25%, compounded annual growth is 25%. So similarly, on the profit side also, these are all stable now. Coming to the business segments, as all of you know that we have four main business segments. One is the API business, and second is the medical devices business, third is finished dosages, and fourth, of course, is our OTC. OTC business already rests in a subsidiary called Dr. Morepen Limited. Now the medical device business, as approved by the shareholders in the annual general meeting on 28th September. So medical device business is also moving into a separate subsidiary. A new company has been incorporated by the name of Morepen Devices Limited, the MDL, Morepen Devices Limited. So as we stand today, the finished dosage business, which is the doctor business, and the API business, they still remain the parent company. And medical device and OTC business are now in a separate subsidiary. So we are working on all the procedure and formalities to be completed for getting approvals in the name of the new company. The business transfer agreement is being signed today after the board meeting. And the medical device business, maybe after March, you'll see it as a separate results. But till the time all approvals are in place, the medical device business will continue to stay in the parent company, but it will be for and on behalf of the medical device company. So all the profits will be will be transferred to the medical device company. So going further on the segment-wise business, so we have already shared the presentation. I hope you guys have gone through it. So the API business has grown by 9%, and this is against a very good growth which we had taken last year. So on a higher base, there is a 9% growth. Last year, it was around 45% growth, same quarter. Diagnostic business is unstoppable. It is in spite of almost no sales in the COVID account. There is 36% growth in the medical devices and diagnostic business, primarily on account of BP monitors and glucose monitors, no COVID products. And finished dosage business, I'm happy to share that it has come back. Last year, this business was badly hit because of the COVID. And we were not able to approach the doctors. Some hospitals were not attending to the medical reps. And of course, customers were not coming. OPD was closed, so we had suffered. Now we are back. There's a 26% growth, but this 26% growth is on a lower number of last year. So we have yet to get to the actual growth. And Dr. Morepen OTC business, which was growing last year also. Last year we had few COVID products also. But including that COVID products, whatever growth we had, now we have grown above that 22% this quarter also. So all businesses have grown very smoothly. So on the API front, we will go segment-wise then. So 9% API, 36% diagnostic devices, 28% finished dosage, and Dr. Morepen 22%. Over 17% growth rate we have acknowledged in the top line, all the segments. Of course, we are as we are growing, we are adding more and more businesses, and API share and sometime at peak was 60-70%, maybe at some time on an average 60%. So now other businesses are growing up. So diagnostic share have gone up from 29 to 33%. Finished dosage business has gained its 0.9%. So the API business is now 54%, devices 33%, and finished dosage is 12.2%. So this is a fair mix, and as other divisions will keep on growing, in the overall at a holdco level, we will see that other divisions will keep on growing and API business will shrink as a whole overall. But when API goes for its expansion plan, maybe it gains back its 60 to 70% share. Coming specifically to the API business, so till last year, we were going at CAGR of 26%. Last year, of course, was extraordinary. We had around 45% growth in the API business. So this year, in the first 6 months, we have grown 13% as compared to the last year. And there is a 9% increase in the revenue. And we have clocked we have crossed 200 crores in one quarter in the API business. That is 201 crores, a growth of 9%. we have very important and very regular products of API, and because of our consistency, because of our quality, so atorvastatin, which is a cholesterol-reducing product, it has grown up by 46%. Montelukast, which is asthma product, has grown very gracefully in the domestic market and in the international market also. It's 28% growth in the Montelukast. And many new molecules of diabetics and one anti-allergy, fexofenadine, they have grown almost doubled, 99% growth. So we have marginal hit in our anti-allergy product, loratadine. So because globally people are using masks and allergies are reducing, so maybe at certain stage people are taking immunity drugs also, though there is a little hit in the loratadine product, but overall we have grown by 9%. Coming specifically to the point of care medical devices business, as I shared, this is unstoppable. It is rocking as usual from last 5-6 quarters. Last year it had grown by 71%. Now in the first half it has already grown by 88%. In the current quarter it has grown by 36%, from a 90 crore quarter to 122 crore for the quarter. And as we shared last time also, basically now more and more people are depending or rather are treating home diagnostic as a reliable method of testing their glucose level and deep blood pressure levels at home. Doctors are recommending that, and maybe somebody in the family is recommending that. But more and more there's a better reach, there is a better demand, and people are spending more on the medical devices per household. If some people are spending only few hundred rupees, now it has gone to 5,000-6,000 rupees in the medical devices. And this sales is like, I would say, not COVID affected. Now post-COVID also we have grown 88%. Of course, there is going to be some stop somewhere, but 41% CAGR in this business is phenomenal. It's an incredible work done by the team during COVID also and post-COVID also. So 36% growth in this business. Here there are two main growth drivers: glucometers, which has grown by 45%, and BP monitors for our chain has also grown 44%. In the earlier quarters, BP monitors was always lagging and glucose monitors was always growing. But now we are saying that glucose monitors certainly are increasing, glucometers, but BP monitors also shown. Glucometers have grown by 45%. And in the first half of the year, the growth is, I won't say incredible, it is unbelievable. 103% growth in the first half of the year in terms of glucometers and the strips which we have sold. There's a 41% CAGR till last year. Including the current year, the CAGR would be much, much more than what we were seeing earlier. But 45% growth in the quarter of a large base. Last year also we had registered a good growth. This quarter also there's a good growth. And I'm happy to share with you that during the quarter we have installed almost 50 lakh, 49 lakhs to be precise. Almost 49 lakh meters we have installed new. There's a 20% growth in the number of installation. And for the first half of the year, there is a 76% growth in terms of meters installed. We have installed 1.1 lakh meters as against the first half of the last year to 76% growth. So meter installation is one issue. Then for every meter installed, we send strips, and for whatever meters have been installed in the previous years, so we are building a base. It's like a printer cartridge model. So it's a closed system. If you buy our meter, so the customer buys our meter, so they buy the strips also for rest of the life. So we give a lifetime free warranty. So it's almost a customer required for lifetime. So we have installed 50 lakh meters more, means 50 lakh meters which multiplied with the number of strips for the lifetime. So during this quarter, we have sold 90 million strips, which is a huge quantity. 9 crore strips we have sold. And there is a 50% increase in the number of strips sold. So if you look at the total number of strips sold, we have touching almost 785 million. So it's like half of the India we have checked the sugar level. Of course, then, but it's not individually, but it's multiple number of strips which we sell to the same people. BP monitor, as I told you last year, because of the COVID, we were seeing there's a big spike, but the spike is continuing. So it grew at 43% CAGR. Now, in the first half, it has grown by 81%. In the second quarter, it has grown by 44%. So BCG, this is also, BP monitor is also increasing. Other two products, non-contact thermometers and oximeters, concentrators, they have not grown much in this quarter. So there's nothing much to talk about it. Of course, we have collected some stock about oximeters and oxygen concentrators. God forbid, if COVID comes again, we are prepared to fight the market. We are prepared to fight the COVID. We have stocks lying with us. But if there are no sales of COVID products, so there's not counted here. So now, since we are focusing more on BP and glucose monitors, so we are increasing the reach of the product, and we are reaching to the masses. So we have retained two Bollywood celebrities, Mr. Boman Irani, who is a senior actor. So he is endorsing our products for both BP and glucose. And for some short time, Mr. Javed Akhtar was also recommending the products of the company. So these are the two, I would say, big initiatives taken by the company for the mass reaches. And there will be certain advertisements on the online, offline, social media, depending upon which city, which country you live, you will be able to see. But otherwise, on the YouTube, you can always find just pick Dr. Morepen or Boman Irani, you will pick me that. Then we have retained Ms. Kareena Kapoor for our new product range of pregnancy. So we had earlier pregnancy kits, but those were earlier imported. But now we are increasing our own capacity, and certainly at a certain time in the current year, maybe in the current quarter or early next year. So you will see on the shelf products of Dr. Morepen on the pregnancy part also. So of course we have already set up the plant. Third important thing, as I shared with you, was the finished dosage. There's a good comeback, there's a good recovery, there's a 29% increase in the business. Of course, last year we had lost 5%, but now we are back with 29% growth. So hopefully by end of the year, we will be able to recover much better than the previous year on all the lost grounds. In the finished dosage, there's a growth coming from antibiotics. So which is primarily, there's a 61% growth of the antibiotics. Then generally the generic division, which sell affordable medicine, that has also grown by 41%. People have become price conscious, and some online sales also. And gastro is the one product which is gained by 5%. Other products, miscellaneous products, have also grown by 169%. These are very good growth drivers. Now coming to our favorite Dr. Morepen brand as an OTC leader in the market. Dr. Morepen brand has grown by 22% against the last year's increased number, which included some COVID products also. So including and covering COVID products, we have grown above that to 22%. So there's no decline due to COVID products. And year as a whole, we have grown by 16%. So, but Dr. Morepen, since it's a separate company, we have a separate CAGR for it. It has grown by 20% in the last 4 years. And this year also looks like we'll be able to match, because in the second quarter we have grown 22%. Here we have three categories main which are growing. So OTC product, which is typical trade products, which is for your cough, cold, fever, all these products, these have grown by 27%. And there's a very interesting growth in the grooming product, with a personal grooming product, with 51%. And third thing which is showing marvelous results is the online product range. If you just happen to look at drmorepen.com website or drmorepen.com, so you would see more than 50 products of Dr. Morepen which are available online in the various categories, which include multivitamins, which include sleep pills, your motivation, mood enhancer, sexual wellness, muscle food, biopains, and including, I would say, the beetroot. So there are very, very interesting lifestyle products. And these online products have grown by 243%. Of course, last year the numbers are small, so I'm not saying the percentage is high, but that shows that the Dr. Morepen as a brand has been very well accepted in the market, and people are willing to try our products. So all three products range are going up. And on the online sales, our effort is that as against the trade, which is certainly happening. So trade is also increasing, but we are focusing more and more and investing more and more money in the online sales. In the OTC category, 12% of the business has shifted to online. I won't say shifted, rather a new range has been launched in the online market. So Dr. Morepen, it took 20 years to create a brand where we are now, but online guys have gained 12% in just 6 months' time. And our personal grooming business under the brand Gub, there 25% of sale has from the online. So this is a good starting point for the company. And of course, there have been a lot of online launches during the quarter and some previous quarters. So every time we get a fresh list, there are multivitamin, PCOS powder, collagen, muscle foods, sexual wellness, iron, zinc, probiotics, vitamins, CoQ10, krill oil, omega 3 is doing very well, sleep tablets are doing very well. There's a slim shake, then beetroot, Bitcoin, green teas, apple cider vinegar. So there's a very, very interesting lifestyle products which people are appreciating it online. Just to give you an idea that Dr. Morepen is a brand which includes devices, which includes OTC and certain generics which are also labeled as Dr. Morepen. So the brand as a whole is grown 31%. For the quarter, the brand value is around 192 crores. But for the half year, it is around 388 crores. So there's a very good traction. There's a 47% increase in the sale of these Dr. Morepen brands. We have started collating the data of the R&D also. Usually we do not have separate accounting for R&D. We expense it out. But last 2-3 quarters, we have started collating the data. There's a 43% increase in the R&D spend for the first half of the year against 4.25 crores in the first half of last year. We spent 6 crores, 6.06 crores in the current period. There's a 43% increase. And majority of it goes to the API, 53% goes to the API, 41% goes for our finished doses in the international market, for the ANDAs, and around 6% is in the medical devices. But medical devices business is setting up its own R&D center, so this will exponentially go up once the new investments are coming up in the devices. That's broadly the contours of the business. Financial highlights we have already shared with the stock exchange. And at the last page of the slide, there are numbers. I can just read it for you again. Revenue up 17%, expenditure up 16%, so there's a 1% actually adding to the bottom line. EBITDA has gone up by 26%, which is a very, very good growth coming at a mid-sized company. Interest, practically there is no interest factor, so from 29 lakhs to 66 lakhs, including some provision because of taxes. So, but in the interest, there was a written back entry. There was some income on account of interest. There was a dividend on preference capital, which was provided in the books of accounts, but later on, while we were settling with the bank, that dividend was waived off. So we have written it back, but that's one time. So cash profit before tax, there is an increase of 53%. So EBITDA 26%, cash profit increase 53%, actually adding to the bottom line. And if we look at the net profitability ratios, this is where I would like to spend some time, that the company's EBITDA percentages are going up very gradually, very smoothly. This year, it has gone up by 0.84%. So almost, I would say, 84 basis points from 10.43 last year, 10.43%. It is 11.28% this year. But if you go 1 year back, so it has grown up from 8%. So last year it was 8.26%. When I say last year means quarter 2 of 20. So quarter 2 of 1920. So it was 8.28%. Now it is 11.28%. So almost 3% increase in the EBITDA margins of the company. So 3% at, if you say, we close at 1,500 crores, so 3% is like 45 crores. So we are seeing a very clear-cut increase in the EBITDA margins. And since there's no tax, everything is adding to the profitability. So profit after tax during the quarter has gone up from 8% to 11.77%. Again, 3.68% increase in the profit after tax, profit before tax. Of course, out of that 3.68%, we end up paying taxes also. But even after tax profit is up by almost 1.4%. But if you look at the profitability numbers before tax, say 2 years ago and now, it is almost 3 times increase in the profit numbers. And percentage-wise, of course, it is going 3-4%. From a pure number point of view, last year, in Q2 of 19, there was a profit of 9.23 crores in the same quarter, Q3 FY20. Now it is 44 crores, so it's almost 5 times profit before tax. So we are seeing that with increase in top line, the EBITDA is increasing, profit margins are increasing. Of course, we are subjected to taxes, but as and when the more and more capex will come, more depreciation will come, we may have some tax shelters. But since the company is now coming into profit, whatever the cash flows we can save, we will always like to save. But if these are invested well through a capex, we get some depreciation. So we may be able to save taxes, but otherwise 15 to 20% is the provision for the taxes. So that's broadly about the profitability. And I shared earlier that profit after tax, profit before tax has gone up 70%. There's a provision for tax for 9.5 crores. Profit after tax is 38% up, 37 crores. EBITDA, EPS is 38% up, which is 0.83. So this is a basic EBITDA, but if we look at the diluted EBITDA, which is after conversion of promoters' warrants after 18 months, so maybe that's sometime next year. So diluted EPS may be around 0.72. But those are broadly, I would say, the financial numbers. But I would like to share with you a few other highlights of the company which are there and which are like a work in progress. We are working on a vaccine with RDF Russia for Sputnik. So our facilities have been acknowledged and those are approved by the RDF. The government of India has already we have requested for inspection after finding all the documentation. So they have written to the state authorities for inspection of the plant. So after that inspection, we will get a license. It may take a week or 2 weeks, maybe by end of a month, we should get a license. But the more important development here is that Sputnik as a vaccine is not very, I would say, not getting very good traction with the authorities because they are not able to produce as much as they promised. So we do not have visibility that how much production will come. So as Morepen, we are a fill and finish company. So whatever goods we will get from RDF, we will be able to produce. We have capacity for 250 million dosages, which can be increased up to 500 million doses. But as per their understanding, they want to sign a 10-year contract. But we are going a bit slow that it all depends on how much quantity they can offer. So if they want to have global supply, so they have to have a production base. We hear and understand, and it's in public domain, that they have signed up with 5-6 Indian companies also for production of vaccine in India. So if any of these partners in India, they are able to produce and they need facility for fill and finish, we'll be able to use our facilities. And it is not only about Sputnik. Any other vaccine which comes to India, whether it is Sputnik or local or international, any other vaccine, I'm purposely not naming anyone. So anybody who comes to have a fill and finish facility in India, and we have the facilities. And as per the understanding what we hear from the government officials and from the international community, COVID is here to stay. COVID is going to be around us every time. We have to be careful. We have to be vaccinated. So first dose, second dose, then booster dose, then maybe next year we'll have some other dose. So the whole purpose is that we should have the facility and whatever business is generated, so that will add directly to the bottom line. And there's no extra expenses which we are doing. So the facility what we are using is a contract manufacturing third-party facility. So we are using only our relationship with the parties and our own skills. So that's happening on the devices on the Sputnik side. And of course, there is a development on the preference capital side. We have some pending preference capital with the bankers. We had conducted a meeting with the banks during the quarter. And the banks have shown very positive response that they are happy to convert those preference shares into equity. And 58% of the bankers have already given consent So 2-3 more bankers are progressing as we talk. Maybe before the end of the year, we should get their consent also. They have few questions regarding conversion formula and all that thing. So whenever we get consent of all the banks, these preference shares will be converted into equity. So it will be around 1 to 2% of the company's equity. And there will not be any cash outflow on that account. But as we go forward, it will unfold by end of the quarter or maybe first before the end of the year. We should have a clarity at what price it will go. It all depends on when we get approval. Whenever we get approval from the banks, it will be at a SEBI determined formula, which will be 6 monthly average or last 2 weeks average, whatever is higher. So banks are comfortable with that, and those things have been given. And third development, of course, now since we have already taken a step forward toward medical devices and we are looking for separate financial partners for that, and we have growth plans for the API also, and we are evaluating how to unlock the value of APIs. So we are under the new scenario where the company has different, growth plans for different divisions. So we have now parked our idea of having a renegotiation with Corinth. You remember we had some discussion with Corinth in the month of May, June, so which they were certainly having different ideas of the business, and we had different aspirations. So now we have, in a way, declined the deal, and we are not working with Corinth anymore on the Morepen or any of its subsidiaries. So they still have interest with us, so we may work in some unlisted company, but in the main listed company, so we are not coming with Corinth, but we are certainly looking for, and there's very good response with many group of investors for individually for the devices company or for APIs or for that matter OTC, which are giving good returns and good growth. Those are primarily, I would say, the broad areas which we are busy with every day. And I'm happy to take questions whenever you guys are ready. And in case there is any other clarification on the numbers, our CFO is there, our company secretary is there. You can always call anytime later also. With this, I would say let's open to the question answer session.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment until the question queue assembles. To ask a question, you may enter star and 1. Participants, if you have a question, you may enter star and 1. Ladies and gentlemen, to ask a question, you may enter star and 1. To ask a question, you may enter star and 1. Participants, if you wish to ask a question, you may enter star and 1. To ask a question, you may enter star and 1. We have the first question from the line of Subhajit Chaudhary, an investor. Please go ahead.
Yeah, thank you for your presentation. Congratulations for the results, and it was really absolutely fantastic result. I have one question, like as you have mentioned in your presentation that the 4 segments that you have, the O2C and then the device business and other two business, that four segments that you are going to probably separate from each other. So are you going to list all of them? And is it going to happen by next financial year?
Mr. Chaudhary, I would be happy to say that, okay, yes, we are on a growth path, but actually listing is not the priority. But the whole point is, the first priority is that businesses should get its due share of management attention. It should have its own management bandwidth and whatever skills are required. So we are building infrastructures, but certainly there's a very known trend in the market that in case any new investor joins, they want to exit through an IPO, and that IPO is usually 2 years, 3 years, sometimes now, for example, even the younger companies are going for IPOs. So I don't want to say that we'll be listing all the companies, but for example, Dr. Morepen is unlisted since last 20 years. But it all depends on the appetite of the investors and appetite of the market, and more importantly, the appetite of the business. If business needs money, we are open. But in case we have sufficient cash flows, we may not go for immediate listings. But yes, we are unlocking the value. So the company's hidden value is much more than what is reflected today in the share price of the company. So every single unit, every single division is worth an X amount. I'm not giving any number. But if we add these 3x, 4x, so then this is not equivalent to what we are today. So every single business has its own parameters, but we are open for that.
Thank you.
Thank you, Mr. Chaudhary. Thank you very much.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Abhishek Bedha, an investor. Please go ahead.
Mr. Suri, thank you for sharing wonderful presentation, and congratulations to the wonderful set of numbers. I have a couple of questions. You shared that there were 4-5 ANDA in pipeline. So if you could share some update on that, and also what is the update on the second facility that you wanted to set up? If you could tell us a bit more.
Sure. Thank you, Abhishek. So I would say that there are two questions. One, of course, is the ANDA. For ANDA, we have 2 phases of the products. One is that there are certain products which we had prepared the dossier. There are 13 products for which we have prepared the dossier, and we are conducting the bioequivalence studies. So those dossiers were set up in a third-party facility, since our plant is not set up for international businesses. And then there are other dossiers for which if the bioequivalence is not required or maybe done at a later stage. But as we stand today, since the company's main growth plan is more towards the global market, so we are setting up our own facility. We have started hiring a team at Madhi itself, and we have retained a few people in our New Jersey office. So now we are working more closely for filing ANDAs from our own side. So maybe it may take, I would say, 9 months to 1 year before we file our first ANDA, but back-end work or the bench work will continue. So the pilot scale work and everything will keep on continuing. So that is our ANDA project. And second, in the API, as I shared with you, that we are already tight of the capacities and we have to increase the capacities. So we have got approval of the land. We have got approval of even of the pollution department. So we have hived off that piece of land, and the groundwork has started. And as far as the expansion in real terms is concerned, as far as I would say putting money behind that and everything, that is still pending, because whatever we are doing from internal cash accruals. And since the business is already rocking and growing at a 30-40% year after year, so we are certainly spending money on the working capital also. So we haven't finalized after this quarter, as I shared with you, that earlier the plan was that, okay, we may have one pool of money and we may give it to everybody in separate numbers. But now we are expecting that we may have a better plan, that devices raises its own capital, maybe API raises its own capital. And at some stage, finished dosages business may have its independent structure, maybe based in India, maybe based in US. So those are the things which are still, I would say, undecided. But on the growth part of view, in API, we have a 300 KL capacity now, 310 KL. So we are increasing to 1,000 KL in the next 24 months at the existing site only. And after that, we want to go to 5,000 KL. From that, we don't have capacity at the existing site. We may have to buy additional parcel of land in an API park nearby. So the expansion plan is huge, but we haven't closed any, we haven't done any financial closure for that.
Thank you, Mr. Suri. Yeah.
Thank you. Thanks a lot.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Junaid, an investor. Please go ahead.
Good afternoon. I just want to find out when we can expect the medical devices issue. Before this financial year, March.
So, Junaid, the audio is not very clear from your line. Could you switch to the handset?
Okay. This Junaid, I just want to ask Mr. Suri when the medical devices issue is coming.
And now I would say on the lighter side, now medical device is a separate company, so that company will decide. But to be on the serious note, in the medical devices business, certainly in the current financial year, so by end of this year, certainly that division will be having an independent working and independent everything. We are already in touch with some investment bankers to bring in fresh capital into that company. But I won't be able to comment right now that when would be the public issue come or when would the IPO come. But it would be certainly decided over a period of time. But markets are hot, everybody is appreciating, everybody is waiting. But being a listed company, I'd like to keep quiet on this topic.
And one more thing, sir, I want to find out is, since we are having approval from outside like Europe and all for your medical devices, so have you started exporting the product?
No, not yet. Of course, as of today, our capacities are short even for the domestic market. So we are barely able to fulfill the demand. And you're saying we're growing by 103%, 88%, 90% quarter on quarter. So, but when we are setting up a new facility, a new plant, of course, at the existing facility only, we have a parcel of 60 acres of land we have allocated for this business also. So at that stage, we will be exporting to other countries also, but it may not start with Europe. It may start with neighboring countries like Vietnam, Cambodia, Bangladesh, and of course some Middle Eastern countries, Egypt. And after we are happy with the small market, then we may go to the regulated market. But once we get a CE certification, we can export to any countries.
Okay, thanks a lot, sir.
Thank you, Jared. Thanks a lot.
Thank you. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. We have the next question from the line of Narendra, an investor. Please go ahead.
Hi. I have 2 follow-up questions on. So one is the notice issued by the Supreme Court for the SAT tribunal issue, and what was the status on that? And the second thing is, so what is the pipeline, the API or formulations? So those are coming out in the next couple of years. At least a roadmap kind of.
Good. Thank you, Naizat. So, replying to your first question, that is notice issued by Supreme Court because they had lost, SEBI had lost in the SAT tribunal, and they have gone for an appeal. So, for the timing, there is no development. We hear that there is a Supreme Court date, but as till date, no date has been fixed and no notice has been issued. I mean, we just said no that there's a date, but so far there's no hearing. And looking at the speed, and of course, because of COVID, there are very restricted working in the courts also. there's no development. But in any case, there we had already won the case, and all SEBI had done was a penalty on the company was that the company would be stay out of the market for 1 year. That so-called punishment we have already gone through. We have already had the burnt of it. And now it is almost 1 year after that also. So that case technically is infructuous, but since the government bodies don't rest on it, we still have to go to the court. So we will go whatever Honorable Supreme Court of India passes an order. But looks like that it's going to be slow only. Coming to our second question on the pipeline of drugs, I think that's my most favorite thing. But on the two aspects, one is the API pipeline that is more stronger, and based on the same API pipeline, we are getting into the finished dosage pipeline also. There are some overlaps and some differences also. The API pipeline is primarily based on the number of products which are going off patent in the next 5 years. So we as a company, we are focusing on the lifestyle diseases only. So high value lifestyle diseases, which is primarily cardiac and diabetic. So on the cardiac front, there are around 7-8 gliptins and glycosins which we are focusing. And then certainly in the cardiac, there is a lot of focus on the anticoagulants, which is also, of course, during COVID also anticoagulants are becoming very popular. So these are the two main lines. And certainly there are certain products in the neuro sector also, which is neuropsychiatric, which is also long-term lifetime product, clinical products. So once it is recommended by doctor, you have to take it for the rest of the life almost. It's very rare that you leave these diabetic into cardiac medicine. So on the same line, we will continue for the finished dosage also. But in finished dosage market, there may be certain products based on the demand and supply of the markets, wherein if somebody wants any particular product, it may not be under patent, it may be off patent. So in case there is a demand for those products also, we'll pick up those products also. And does it answer your question, Narendra?
Yes, Mr. Shuri. So I'm quite convinced, and so a little bit more clarity on next 3-4 years. So the new products which are going off patent. So are we on track to capture those opportunities? And so are there action plans prepared and ready for that? And in terms of meeting the finance and also completing the projects on time to gear up for the new opportunities. So are we on track with that?
I would say that certainly as it stands today, we have done a lot of work on products which are going to expire year by year. So for example, we are sitting in 2021 and almost at the end of the 2021 now. So going forward, there are going to be more and more products, and I can share with you, for example, sitagliptin is one product which is expiring in 23. Then of course we are working on elagolix sodium, which is expiring in 21, 24. There are 3-4 different patents. We are working on tafamidis, which is expiring in 24 and 26. Then there is certainly sitagliptin. Then there is sotagliflozin, which is again expiring in 27, 28. So year-wise calendar we have got what product expired one and what are we going to do about that. Ezetimibe, then Ninatinib. We are also working on these monoclonal antibodies to an extent. So I would say these are highly technical lists. Even if I explain to you, you may not understand it unless you're a doctor. But I'll explain you the process. The process is that whenever any product is going off patent, so we start working on those products like 10 years in advance. And once the products reach near expiry, we already have developed the product, we have filed a drug master file, and we have already tied up for the customers. So now for the next 3 to 4 years, whatever products are expiring, so we have the DMS set up, we have the technology set up, and we are certainly working more and more towards our cost reduction. The moment product expiry comes in, we will be able to launch those products in the API market. But is API market the only solution? But I would say the answer is no. API we have to sell to others. We always need a customer. So that is why as a company, So we would like to file our own ANDAs also, that whether instead of selling API contribution is only 10-15%. So 85% of the value addition comes from the finished dosage.
Yes.
So if we have our own finished dosage also, so then naturally that would be a jackpot. Most of the companies who have their own ANDAs, they may not have our own API. So we have a strength that we have API also and we have finished dosage also. So sometimes customers say, oh, that there is a conflict. You are doing your own formulation also, so we are doing only API also. So we are discussing internally that how do we solve this conflict. So maybe finished dosage is done through a separate company or API is done through a separate company. It's very evaluating the options.
Got it, Sudhi. One more follow-up question. So with the current run rate of cash flow, so it would be manageable to continue the expansion projects, or do we need any capital from equity dilution or from any bank loans?
I would say that with the current internal accrual, we are happy to fund our working capital. Certainly, we do not want to block our funds in the capex and strive them for the cash for the working capital. And we do not have any bank loans so far. We do not have any borrowing so far. So we don't want to get into that. And we would prefer that whatever growth opportunities are there, whatever new investments are there, those should come through a capital route. Now, whether the capital event takes place in the main company or it takes in the subsidiary company, so those are, I would say, the professionals who understand these things much better. So as a company, we would be happy to say, okay, this is what we need to do. And certainly, we do not prefer any debts and loans. So we are running this 1,500 crore company without, I would say, a single rupee working capital. We are working 100% in cash basis. And we do not want to block our cash on the fixed assets. So that is why there is a bit slow on the increase in the capex.
Okay.
Because we would certainly be looking for some capital event for that.
Okay. Yeah. Thank you, Mr. Sudhi. So that answers.
Thank you. Pleasure.
Thank you. Participants, if you have a question, you may enter star and 1.
2 more minutes left. We can wrap up at 5 o'clock.
Sure, sir. We have the next question is from the line of Subhajit Chaudhary, an investor. Please go ahead.
Yeah, sir. Thanks once again and giving opportunity to ask you another more question. I was just going through your presentation, particularly on the financial presentation. I've seen that I've noticed that profit after tax for the financial year 21 that was 27.17 and now half yearly it looks like 37.36. So, but if I compare with the profit before tax, like 27 with respect to 27.17, it was 27.51, whereas that PBT of that half yearly that considered 46.86 with respect to 37.36. So there is a huge difference. Is this because of you have taken the provision of the taxes prior this half yearly itself, so that that's why there is too much of differences. Is that anything that you have taken the provision already?
Ajay, can you take this question, please?
Yes, sir. Actually, my question is that
Ajay is our CFO. He would explain. Ajay.
Okay.
Yeah. In fact, the profit before tax, it 46.86 crore. This includes reversal of 9 crore 77 lakh of non-taxable income. So it was basically a dividend provision which was made in the previous years. So it has been now reversed. So this income is not to subjected to tax, right? Because earlier it was no income tax claim was income tax was claimed on this number. So to this extent, the taxable income reduces. Plus, we have carry forward losses of more than 25 crore. So overall, our taxation rate comes around 20 odd %. So that is how So it is against 25%, it is coming around some 20%. So that is how the lower taxation amount.
Okay. But I think that's once you complete the financial year of 21-22, probably you will get once you have the consolation on that, then probably you will get a more a reversal of the amount, and you will get a more benefit out of that, I believe so.
Yeah, as we progress, then we'll be able to get more.
Yeah. Okay, thank you, sir. Thanks a lot.
Good. Thank you, Mr. Chaudhary. Thanks a lot.
Thank you. As there are no further questions, I would like to hand the conference back to Mr. Sushil Suri for closing comments. Please go ahead, sir.
I would like to personally thank all the participants for their valuable contribution, their time investment, and their continuous, I would say, interest in the company. And more importantly is that I would like to thank everybody for being progressive, participative, and supportive. And I would just say, just take care. Don't be aggressive. Don't be adventurous. COVID is still around us. Of course, in North Delhi, in Delhi, Gurgaon, we still have number of cases are less, but pollution is high, and weather is bad. Please take care of yourself. Stay inside, wear mask, and be prepared. So COVID is just around us. Thank you very much, guys. Thank you. Thanks a lot.
Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Morepen Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.